I'm Bob Henderson. I'm the Nomad Dad, and I've been asked to talk to you about protecting yourself from the stock market bubble. Is it a bubble? Well, I don't know. Time will tell. I can tell you this. The bond market was in a bubble, and it's already burst. We were in a 30-year bull market from the early 1990s, or maybe even before that, 30-plus year bull market on bonds. There was a time when I was just starting my career, believe it or not, when short-term rates were close to 20%. You could get 20% on a money market. This is at the end of the 70s, early 1980s, when the Federal Reserve had to raise rates so high to absolutely crush inflation that was running double digits, getting close to hyperinflation in the United States. So 20%. And rates were still reasonably high throughout much of the 1980s. But then we began to get into kind of a disinflationary situation, particularly after the fall of the Soviet Union in the late 1980s. I think this ushered in this period of lower interest rates along with some other factors. So we had a good 30-year bull market in bonds. And as you know, during COVID and a year or so after that, we were actually at the zero bound on Treasury rates. They were zero. And it was NIRP, negative interest rate policy in many European countries where bonds were negative. So if you bought a bond, you were paying the government to own them. And you have lost trillions of dollars if you bought NIRP bonds or even zero bound bonds in the United States. You've just lost so much money because in the U.S. now, the 10-year yield's up around 5%. And so if you go from 0 to 5% in such a short period as we have, there's been a lot of carnage in the bond markets. Now, some people have called for a top. I don't know. We shall see. Many people still think, as far as stock market prognosticators are concerned, that the Federal Reserve is going to start lowering interest rates on a concerted basis. We shall see. I'm not sure that that's necessarily going to be the case. They keep talking about getting inflation back down to 2% and keeping it there. Time will tell. So the stock market bubble is one thing. I will say this, that with the zero interest rate policy that we've had in the U.S. and NIRP around much of Europe, it's really killing investments that are over leveraged. Commercial real estate is one of those. You're beginning to see that in the United States. That with the fact that in the major cities, people are not coming back to work. They're working from home in many cases. So those office buildings tenants do not need as much space. Maybe they need no space anymore. So it's killing commercial real estate. There are a lot of companies that are in the Standard & Poor's 500 index that I would call zombie companies, that they cannot cover their earnings, cannot cover the debt service requirements. And what was it Warren Buffett said? When the tide goes out, you see who's been swimming naked, as only Warren Buffett could say, but that's true. And I think we're going to see some of that. You know, I was in the investment business for close to 40 years, and I was not necessarily a big proponent of the 60-40 rule, but I think you see a lot of reps in the business who've been trained in this and who've been ingrained in this. My view is every situation's different. Never use a cookie-cutter approach. And by the way, I'm not giving you investment advice here. But these 60-40 portfolios, which work for a long, long time, 60% stocks, 40% bonds, well, at these high interest rates, 40% bond portfolio is probably too high. Now, if interest rates start going back and downward, perhaps this is a generational buy as far as bonds are concerned. But I'm not so sure. I would think, at least on a personal basis, if we're going to continue with this so-called green revolution, you're going to need to be investing in commodities, commodity-based countries. Things like copper and lithium for the EV batteries is going to be something. Rare earth minerals, and you know who controls a lot of the rare earth minerals, and that would be China. And this is not necessarily a good development for the West, who may need those if they're going to continue with the green revolution. Here's one thing. I didn't agree with a lot of what Donald Trump had to say, but this one he was kind of out of left field, but I think he's absolutely right. He wanted to talk about buying Greenland. Why? They got a lot of rare earth minerals there. You may be seeing a fight over Greenland as we run out of these rare earth minerals if we continue with the green energy revolution. Think about that. I don't know how you would invest specifically in Greenland, but there are rare earth mineral ETFs you might want to look at if this continues. But I think hard assets, countries with some of these, like I say, copper deposits and the copper providers and so on, these items that you're going to need to continue the green revolution, I think these are assets that you might want to own, or you invest in an ETF that has the countries that mine these sorts of minerals. So those could be countries in South America, maybe even Africa. China may be a little bit more difficult to do. This is something that is not easy to necessarily find a specific company, so maybe an ETF makes more sense. But back on the 60-40 for a minute. Not sure we've gotten to a stock market bubble, but there have been times in the United States where that has occurred. So in my lifetime, we had a major bear market in 73, 74. Not again a major bear market until the dot-com crash, the Y2K thing that happened in 2000, 2002 or so. Then the 2007 and 8 downturn. I'm not counting COVID because that quickly recovered. So probably three major. And then, of course, the granddaddy of all had to be the Great Depression, the roaring 20s. Stock market got out of control. Crashed in December of 1929, and it took 25 years to get back to where it had been. It took to 1954 to get back to where it had been. So if things go down, typically it's a 12 to 18 month downturn on a bear market, but that one, and if we have another situation like that, I'm not calling for that, it took 25 years, and that's more than most of us are going to live from this point forward, or at least a lot of us. So it's a long time to go. That's a full generation to get your money back in that particular case. But historically speaking, buy and hold has been the best approach, with that maybe being an outlier. I'm not necessarily thinking we're going that way, but if we had a major bear market, it certainly wouldn't surprise me. So I'd be diversified. I'm not sure the 60-40 rule makes as much sense if bond yields don't come back down quite a bit. And again, I'd have some hard assets in there. So that includes some of the rare earth minerals and the other things like copper and uranium that you're going to need for the green revolution. And I always like gold and silver for a hedge in my portfolio. Those are some of my thoughts, not giving you specifically any specific investment advice. Pay attention, do your due diligence. Leave some comments. I can come back in a future video and maybe address some of those comments. I'm Bob Henderson. I'm the Nomad Dad.